Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the late evening of Sunday, October 21st, 2018. And in this video, I'm going to discuss gold stocks, their missing catalyst, and also the uranium stocks, what's been happening there. So starting off, we have a daily bar chart of gold, and gold, when it closed above 1215, it confirmed that at least a short-term or medium-term low is in place. There's a little bit of resistance at 1240, but the first major resistance for this rally is going to be at 1260, as we show here with the thick red line. And then you can see the band of moving averages, which includes the 200-day and 400-day. Those are in the 1270s. The 200 days at 1279, but that's coming down. 400 days at 1275. So for gold, we really have a minimum upside target of 1260. The maximum upside target, let's just say the low 1270s. At the bottom of the chart, we have silver divided by gold, and silver lagging is just not a good sign that this is going to be a major rally. I mean, silver, it can lag at turning points, and then it really gets going once the turn is confirmed. But if we don't see silver really start to pick up as gold approaches 1240, 1250, then it's just it's not a bull market rally. It's just an oversold rally. I want to talk about the COT a little bit because there's just we'll see gold bulls and gold bugs. I mean, they've been talking about this for weeks, about how there's this major low in the COT and then it has to be a major low in gold. That's not necessarily the case. And before we get to our argument, I'll note that at the bottom, that's the net speculative position. So we're looking at the net speculative position divided by open interest. So we measure it as a percentage of open interest, and you can just see it's very easy to compare what's going on now with the past and decades ago, really. I mean, we have data going back to 1986. So a week or two ago, this position did get down to minus 6%. So in recent weeks, the net speculative position actually went negative, which means the speculators, for the first time in 17 years since 2001, they were actually net short. They're net long again because obviously gold's put in some kind of a low. They're starting to cover, and that's why gold's rallied up to last week up to almost 1237, but it closed at 1229. But anyway, it's fundamentals that really change trends and drive major turning points. It's not sentiment. And I mean, this is just a real thin example here, but look at how negative the COT got in 1997, and then also in 1999. Yet gold's fundamentals didn't shift at those points. So what happened is gold just had brief oversold rallies. And of course, gold really didn't start to get going until earlier the middle of 2001. So if you were just basing everything on the COT in 1997 or 1999, you could have said, wow, this is at an all-time low. Gold's been going down forever. This has to be a turning point. So you need to use fundamentals to confirm. And not quite as good of an example as 2013, but then we see twice in 2013, the COT got down to, I want to say, about 4 or 5% of open interest, and that was the lowest since 2001. Yet that wasn't the end of that decline. That bear market continued for another 2 years, another full 2 years. And so why did things suddenly turn at the end of 2015, early 2016? Well, gold's fundamental driving force, declining or negative real interest rates. We had inflation picking up at that time and into 2016, and the Fed only did the one hike for 12 months. They hiked in December 2015. I mean, that was priced in for a while, and then their next hike wasn't until December 2016. So The fundamentals for gold were bullish at that point, and that's why gold had a really big rally. And so that, I mean, conveniently you could say that the COT was really low, but my point is fundamentals are really going to determine, when gold puts in a major low, when it's really going to begin a bull market. So the fact that the COT recently, the last couple of weeks, I should say, 17-year low, yes, I mean, it's bullish for the short term, but it doesn't necessarily mean we've put in this major bottom and we're about to start a new bull market. Because look, speculators drive the market and they follow trends, and unless the fundamentals really turn and we see gold explode above that resistance in the 1270s, then we're not going to see speculators increase their positions. They're at 7% now. I mean, they're not going to increase their positions to 30, 40, or 50% unless things have really turned, and they're not. They haven't turned, in my opinion. So I know that's a lot to take in, but just be cautious about a lot of the COT analysis you see out there, because I don't agree with much of it, and a lot of times people make too big of a deal out of it. So with that being said, but I will get into fundamentals a little bit more in a couple slides. But here we have the weekly candle chart of the miners, GDX and GDXJ, and this rally is essentially just retesting the previous breakdown from support, which for GDX that's around 21, for GDXJ that's around between 30 to 31. Doesn't have to be a perfect retest. I mean, we look at the moving average here, which is, this is a weekly chart, but we use the equivalent to the 200-day, so we have about 21.5 for GDX, 31.5 for GDXJ. One thing I want to note is on the hourly charts, there is that head and shoulders bottom, and that projects to 21.25 for GDX and about 32 for GDXJ. So 6% more upside for GDX, 8% more upside for GDXJ. I mean, if that does happen and we see more of a rally here, which I expect, it's going to run into really hard resistance. And another thing here, I'm not showing the chart, but the advanced decline line for GDX has been really, really weak during this rebound, which is surprising. And if you go back to the rebound in January 2016, and then the one in December 2016, during those rebounds, we saw a massive upside move in the advanced decline line. So when you have a really strong rebound that is going to have sustainability, you have to have really strong breadth. You have to have the majority of stocks rising. And so the advanced decline line, again, you can't see it in the chart, but it's telling us the opposite right now. There hasn't been strong breadth in this move. So that's another reason why this is really just an oversold rally and not the start of some massive move higher. Next, more good news. I mean, I'm being facetious, but the uranium stock. So 3 weeks ago, I was getting excited, thinking we had a major breakout here, and that completely failed in the last 2 weeks. And so when you have a false move, then when it goes in the other direction, it tends to be a fast move. It's a saying, from false moves come fast moves. But anyway, so as I was saying, 3 weeks ago, I thought we had a significant breakout here, new 52-week high, new 18-month high. Last 2 weeks, you can see those vicious, full black candles, kind of similar to early 2018, but even worse. I mean, 2 weeks ago, that's a bearish engulfing. More confirmation a week ago. So this is a failed breakout. Don't expect. This is just dead money for a while. I don't know. Is it 3 or 4 months? Is it 8 months? Is it 6 months? I don't know. I can't predict the future. But I mean, given the chart action here, we're not going to see uranium stocks do much over the next couple months. And what we should watch for here, this index closed at 69. Let's watch and see if it can hold the moving averages at 63 and 64. Because if you go back to the action in 2017 and 2018, when uranium stocks sold off, they couldn't hold those moving averages. Let's see if uranium stocks can do that this time that would be a small positive. But we do have a failed breakout here. Everyone's getting excited about uranium. The real bullish move doesn't look like it's starting right now. In fact, the opposite. So we're going to have to be patient. We're going to have to wait. We're going to have to wait a while, in my opinion. And this index it's 11. It's basically the 11 largest juniors by market cap and how many pounds they have on the ground. So Cameco is not in this index, but it's basically all the other biggest uranium stocks, juniors, I should say, just to be accurate. So not good news on that front. Sorry to bring it up. But anyway, fundamentals. Let's talk about precious metals. And if you follow my work, you've probably seen me talk about this or write about this before. But the fundamental turning point for precious metals is going to be when the Fed ends its rate hikes. It's going to be after the Fed's last rate hike. Now, go back. I went back. I looked at the last 60 years, and in 10 of the 12 rate cut cycles, gold stocks' average gain was 185%. They had a minimum gain of 54%. And so when did that move start? It started an average of 1 month after the Fed's last hike and a median of 2 months after the Fed's last hike. So we're starting to see the global equity markets, ex the U.S., look like they're in an early bear market. The U.S. will probably follow at some point, but that doesn't have to mean it's going to follow immediately. It might take 6 or 9 months. Who knows? So I personally think the Fed is going to be able to hike at least one more time, probably 2 more times. So based on that, it's still too early for precious metals, but I'm strongly confident that whenever the Fed is done hiking, that's going to be the time when we're probably going to see precious metals rise from the dead and begin their next bull market move. So in my opinion, it's still too early, but keep an eye on the bond market and keep an eye on the Fed, because when they get to the end of these hikes, that's going to be when it's time for precious metals. Sadly, it's not time yet, but it will be time soon. I think at some point next year. You can follow all of my work at thedailygold.com. You can consider my premium newsletter. It's $150 for 6 months, and I focus on market timing and stock selection in the junior miners, junior explorers. And if you want to know which juniors really have the goods and best potential, you can sign up for our service. I make it highly affordable. We have great industry sources, so we know and learn which are the companies that really have the best management and the best projects and potential, and not just those that are mining the markets for a paycheck and that sort of thing. Thank you so much for watching the video. I really appreciate it, and I look forward to publishing another video update for you guys in the weeks ahead.